I'm talking to the CEO and founder of Frontier Digital Ventures, Shaun Gregorio. Shaun, thanks for coming on the show.
Pleasure, Peter. Thanks.
All right, mate. Now, can you tell us what Frontier Digital Ventures actually does?
So Frontier Digital Ventures, we invest in and operate online classifieds businesses in emerging markets. So think of, realestate.com or car sales in Australia. Think of those businesses that we identify in emerging markets, in high growth emerging markets around the globe. We look for opportunities in those markets and we look for online classifieds businesses, early stage businesses. We like to invest in those, help the founders operate them and then ultimately buy more of them over time. So our goal is to build a portfolio of market-leading online classifieds businesses with a real focus on those businesses being in emerging markets.
Okay, why don't you give us a classic example of a business you detected, you then invested in it, and I presume you also give expertise as well. And what is the end result for that particular business, and then ultimately for the bottom line for Frontier Digital Ventures?
Well, look, I guess the best example is the business that we first invested in, which seeded the idea for us to build the business that is Frontier Digital Ventures. So many years ago, back in 2014, we were running online classifieds businesses in Southeast Asia. We were running the iProperty Group, and we'd launched also a group of automotive portals, online automotive portals in Southeast Asia as well. We'd invested in many emerging markets privately around the world. It was around that time that we were approached by a couple of brothers who were Pakistani born. They'd been raised in the UK, and while they were in the UK, they decided to start a property portal in London for Pakistani expats who were looking for a property back in Pakistan. That business started to grow, so they moved back to Pakistan and they approached us and said, hey, we've been watching you guys. We really enjoy what you've done in emerging markets with this business model. So this is an online property portal. We'd love you to invest in our business, and we want the playbook. We want the expertise that you guys have developed over many years, and we want to try and apply that to our business and make it grow faster. So we acquired 30% of that business at a valuation of around $4 million. We then worked with the founders, the two brothers, over the next couple of years to give them the playbook to help them figure out how to grow and scale these online classifieds businesses in emerging markets. We've just completed a top-up round into that business at a pre-money valuation of $400 million US. So that business has grown 100-fold in the last 6 years. Now, we can't take credit for all of that, of course. We did certainly work with the guys a lot in the early days and get them on the right path. And then our goal is obviously to build our equity stake thereafter. And that was the business, Peter, that really gave us the motivation to go and do a whole lot of other deals that we've done in emerging markets since. So that there are many other stories like that business, Samin, which is in Pakistan.
And how many companies now do you have in the stable, effectively adding capital to and expertise?
We've got 15 businesses now that cover about 20 countries. So we've got a big focus on two key regions, developing Asia. So we look at parts of Asia, ex-China and India, and we look at markets like the Philippines. We look at markets like, Vietnam, markets like Myanmar and Sri Lanka and Pakistan. We've got a big focus on Latin America. So we're in quite a number of Latin American countries now. We go right down from Central America, right through Colombia and Peru, down as far as Uruguay. So that's a big focus for us. We've also got an increasing presence in the MENA markets, which is the North African markets, places like Morocco and Tunisia and others. So our footprint, whilst global and arguably quite dispersed, is actually quite focused on a couple of key regions that we really like.
Now, you made the point that you've gone into Latin America and to North Africa, and some people would say, well, they seem like a risky place to do investments, but you've been operating in Asia now for 11 years. I guess what you might have thought going in and what you know now after years of experience, explain to us what it's like actually dealing with these sorts of businesses in these different kinds of business domains.
Yeah, it's fascinating, and you're right. We've been operating in emerging markets for the past, me personally, 11 years, and prior to that, even when I was with the REA Group based in Melbourne, we were doing more and more investing in emerging markets like the Middle East and parts of Asia. But look, certainly when you're in an emerging market, we're based in Kuala Lumpur in Malaysia, your perspective is a bit different than it might be in George Street or Burke Street in Melbourne when you look at these markets, and they do appear, a bit far-flung and a bit exotic and a bit unusual. But for us, the charm of emerging markets is the rapid growth story. This model works particularly well in emerging markets, the online property and online cars. It brings a sense of formality to the markets that perhaps wasn't there before. It brings a bit of structure to the markets, which wasn't there before. And it also brings a sense of trust for consumers. So consumers in an emerging market that are a bit loose and fast can now go to a more reliable platform to find a house or to find a car and ultimately transact. But yeah, look, we really enjoy emerging markets. They're a lot of fun. It's not so straight up and down as some of the developed markets, and they are riskier. The trade-off, of course, is that the potential is quite significant. The growth rates are quite high, and certainly in emerging markets, Peter, you tend to have less sophisticated competition. So there tends to be one really clear market leader in these categories. It's not like a market in Australia in property, for example, where you've got REA, but you've also got Domain and you've got state-based organisations and the like. So in these emerging markets, you tend to get one clear market leader and they tend to dominate the market, and they do that on the basis of developing trust with consumers and sellers. And they really become a de facto regulator for the market as well. So if you think about somewhere like Pakistan that we mentioned, up until a few years ago, the ability for a consumer to go to a trusted source, find a property that actually existed, that was available for sale, and that they could trust that process, that platform didn't exist.
Yep.
So, the platforms that we invest in, whilst they are in slightly higher risk geographies, they do actually play a really significant role in improving the structure of the market and the process for consumers and buyers and sellers.
How was the year, particularly between February and March, when the world was scared off its perch, and then what was the bounce back like as a consequence of that?
It was a shocker, wasn't it? And I'm just so glad it's December. We were actually in a really good, got ourselves in a really good place in Jan and early Feb, and we'd been attracting more investment interest from the US and more people interested in our business. Then, of course, all of a sudden this pandemic comes along, and sense of the unknown, I think, pervades many people. We just tried to look at what had happened in SARS and in Hong Kong. We studied really closely what was happening in Wuhan, and we even looked at the financial crisis, 708, to understand the right course of action. And we moved pretty quickly right across our portfolio. And, we cut costs because we knew that there was going to be a reduction in commercial activity, which means fewer houses and cars are going to be sold. We moved pretty quickly to do that. We also, by studying a bit of history, you found that market leaders actually came out of these crises probably more entrenched than they were before. Yeah. They trusted brands. There was a flight to safety in a psychological sense. There was also a real shift in people's preparedness to do more online. We were locked at home, and I personally have ordered more stuff online this year than ever before, and I'm sure that's the case with most people. Yeah. That really played out to people prepared to do more of the search for a home or a car online, right through to doing much more of the transaction. So while March and April were pretty grim, we saw a recovery in the latter half of June. We saw that strengthen in July, and that was consumers coming back to the internet and doing more commercial activity. And certainly over the past few months, we've seen a much stronger return to normality in emerging markets. And keep in mind, emerging markets are not shutting down their economies for a second or third time. Yep. If there's a second or third wave, they're keeping their economies open and they're learning to deal with it. And I think the light on the hill is, of course, a vaccine. But we've probably finished 2020, given everything that's happened, in pretty satisfying shape. We're pretty happy with how it's finished.
Yeah, I know I've talked to other online businesses, particularly in the travel area, and you can imagine how they felt because they were just completely chaos. And many of them have said to me, well, it was terrible, but we did cut a lot of costs and when the borders start opening up again, we will rebound very, very effectively. So I guess in your case as well, you've cut a lot of costs that you wouldn't have gone for before the coronavirus.
Look, certainly in digital, emerging market businesses that typically grow rapidly, people typically are happy to live with reasonably high costs and costs that are growing almost as quickly. It was a rare moment in time where everything stopped and you could actually go back and pretty forensically look at your cost base.
Yeah.
And most businesses would have to confess that they found areas that perhaps they could save on. And our hope is that those savings endure and we can ride the rebound and be in much better shape in 2021.
Yeah, tell us about 2021. What do you expect to see for the company?
Look, like everyone, can't wait for it. Champagne's already on ice for December 31, but we look pretty cautiously optimistic. We know that COVID is still going to impact economies and that's not going to finish. I think the first half of the year will still be a bit unpredictable, but on the whole, really bullish about 2021. We managed to do a couple of deals in the latter half of this year. We made a few acquisitions which were opportunistic in the environment that we found ourselves, and we think there might still be a few of those on the horizon. So we're pretty bullish just on the organic growth in our portfolio. Our businesses are rebounding well. Equally, we see the opportunity to grow our portfolio into next year, given the stressed assets that are out there. And we think that if you're in a good position and you've got a strong balance sheet and the market you have the faith of the market, then it's a really good time to grow your business into next year.
Yeah. So obviously the vaccine is going to be really important to push economies that you operate in back towards normalcy again. And as you imply, it'll probably take a year, but the first half will probably be worse than the second half. Can I ask this question? You must have seen a degree of variation between the stimulus support you've seen from country to country to country. In the countries where they've given the most stimulus support, has your businesses responded accordingly?
Yeah, it's interesting. Certainly in places where there has been proactive government action, we've seen the property market hold up pretty well. In a lot of these economies, the property market is a significant part of the economy. It's a source of wealth. It's a source of, or it's a destination for investment. It's, it underwrites urbanisation. It employs a ton of people. So there was a real desire in most of these economies to keep the property market going. The automotive market probably got a bit smarter in that they were forced to sell cars without ever going to the showrooms and things like that. Certainly where we saw government support on the one hand from an industry perspective. On the other hand, Peter, we also saw a number of economies underwrite from a more social welfare perspective, underwrite wages, underwrite payments to workers who were perhaps going to be otherwise dismissed. So those economies probably held up, but from a different perspective. All in all, though, where we saw little or no action, you just saw prolonged lockdowns. Yeah. And when you saw prolonged lockdowns, you just saw a prolonged stagnation in economic activity. And, one would hope that whatever path each country's chosen, that we've seen the worst of it. And for those countries that have chosen a path of least resistance, well, it might take a bit longer for them to recover. But certainly we have seen some stimulus in emerging markets. But it's been more about, as you say, stimulating the economy, a little bit of sort of social welfare net, underwriting some of the folks who are probably looking at losing jobs.
Shaun, good luck in 2021.
Thanks, Pete. Have a great Christmas and Happy New Year.
Thanks, mate.